And so it's good to see inflation moderating, but remains too high as families are getting crushed under Bidenomics. Hello, welcome to this week's economy. I'm your host, Dr. Vance Ginn. I hope you're having a prosperous day. Well, today I'm delighted to bring to you another episode 55 on April 2nd is when I'm recording this because I've got some other things going on this week. I know you'll see it on Friday, April 5th, but it's already April. So let's jump right into it. We got a lot of things to talk about once again. The first thing I want to talk about is the latest on the Federal Reserve and inflation. If you want to know what's going on with the Fed, you must look at its balance sheet. Too many people confuse the balance sheet with interest rates. Interest rates are the price of credit, which the Fed manipulates with its balance sheet. So there's a difference between these two. The manipulation isn't just Treasury debt, which is mostly what we see. It's also agency debt, federal government agency debt, mortgage-backed securities, and more. Here's a chart that you'll see in the show notes page under the paid subscription portion where you can look at what's being manipulated over time. And even though there's the manipulation that's being reduced of the Treasury debt, it's increasing again. And when you look at the balance sheet as a whole, it has went down from $9 trillion down to $7.5 trillion. But that Treasury securities, the debt, the $34 trillion, right? Part of that's being held by the Federal Reserve. That has been coming up recently. They were going down by about $95 billion a month, but now it's trending in the other direction. This is going to put more inflationary pressures out there, and it's going to mean that we're going to face higher inflation and interest rates for longer. So the bottom line here is that inflation and interest rates will be higher for longer than expected because the Fed's balance sheet is too large and they're not cutting it enough. Now, what about inflation? We also had some new data come out with that here recently as well. Headline personal consumption expenditures, PCE, is what it's called, inflation, in February 2020 remained the same at an elevated 2.5% over the last year. This is the lowest since March 2021, but it's higher than the rates before then since 2011. So you got to go a long ways back. Now, if you exclude the volatile, though necessary, food and energy prices, you get the core PCE inflation. It increased in February year over year by 2.8%. Now, that's the lowest since April 2021, but the highest before then since 1991, even further back. So there's still a lot of inflation out there. The Fed isn't done in its fight to get it to its 2%, which is too high of a target average rate of inflation. And so it's good to see inflation moderating, but remains too high as families are getting crushed under Bidenomics. Real average weekly earnings, when you look at your average hourly earnings times the number of work hours or weekly hours that are worked, remains down 1.5% adjusted for PCE inflation, or down 4.2% adjusted for the more often reported number of CPI inflation since January of 2021. So basically, what does that mean? Since Biden came into office, people's purchasing power has reduced substantially, and this is not a good situation. It's why so many people see the inflation, see the economy in a poor situation, even though some of the headline numbers look good. So here's the latest on GDP growth. BEA reports the average of real GDP and GDI, so gross domestic income, which the average of these are called gross domestic output or real GDO, increased by 4.1% in the fourth quarter of 2023, which is the fastest growth excluding the lockdown period since Q4 2017. During the early stages of deregulation and TICJA, Tax Cuts and Jobs Act, during Trump. But real gross domestic output is up just 2.9% since Q4 of 2021, when there were declines in 3 of 4 quarters thereafter. So that was not a good situation. And I really think that there was a recession in 2022, even though they haven't called it one yet. Moreover, real gross domestic output is well below the pre-lockdown 2020 recession trend because of slower growth and declines from lockdowns and slower growth due to excessive government spending by Trump and Biden and Congress, right? There's too much government going on. Higher regulations by Biden and higher taxes by Congress and Biden overall. The path forward must be more growth and prosperity. It's got to cut government spending, reform taxes, reduce regulations, cut the Fed's balance sheet, expand free trade, and improve the immigration visa system. In general, we've got to reduce government intervention to best let people prosper. In other news, there was things going on. Senator Hawley, the United States Senator Hawley, talked about banning people from China to buy property across the country. So which country's people will Congress ban from buying property or selling goods and services from next? This is China now, but which one will it be next? Which other countries will we not like a lot? And remember, the more that we're banning things and doing things and not intervening or talking or having a dialogue with other countries, the less likely we're going to be more prosperous, we're going to have better security, and we're going to have more peace. That's just the fact of the matter of looking at history. There's a lot of neocons or defense hawks who want to pressure China a lot, and I understand where they're coming from. But at the end of the day, free markets and free trade is the best way to go. And we remember, we're also not trading with China and America. It's trading with Chinese people and American people. It's not that the Chinese just own every single thing. Yes, they're a communist government. Yes, they take their shares of the government, and I wouldn't want their economic or political system here. But remember that we're also pushing away the people who might be that might like our constitutional republic and free market capitalism here. So I think we've got to be very cautious about being too hawkish on what's happening in China. And then maybe look at other countries, because remember, the places that we can't buy property from China means fewer people are going to have income in America to buy other things. There's always something that's going on in these exchanges, or they wouldn't take place. So let's be cautious about national security issues, but not overregulate things in the process. How's the Texas economy doing? Well, the Texas economy continues to grow rapidly. Tax revenue continues to come in at a rapid pace as well. And by the Texas Comptroller, Glenn Hager's talked about that. Even Governor Greg Abbott has talked about recently saying, look, we need to put more of the surplus to reducing taxes. And that's exactly what they should do. Texas should really look at cutting the school M&O property tax by reducing the tax rate, not by raising the homestead exemption or something else ridiculous, but actually cutting the tax rate, and have the largest property tax relief of more than $14.2 billion over a 2-year period, instead of the second largest that they passed last year of $12.7 billion. You combine that to make sure that we can keep taxes low by having the rollback rate of 0% on all property, not just an existing property of 3.5% growth rate today, but 0% for all property, and also put in a spending limit for all revenue based on population growth plus inflation, and you freeze school M&O property taxes so that the state buys it down over time until it's eliminated. That's how we get real relief for people from their property taxes and the housing unaffordability issue across the economy. And then, look, the economy is doing well in Texas in a lot of ways, but there's a lot more things we could do from pro-growth policies such as this. Now, there was an article recently in the Texas Tribune talking about that Texas is kicking people off of Medicaid. That's not happening. That's just bogus, because remember, the federal government put in these situation where they suspended a lot of the rules for Medicaid during the pandemic and everything else that said that you can't age out or income out of Medicaid. So many people were getting much more income than the eligibility requirements under Medicaid, and they were much older than 18 or something else of whatever the age group was that they were in, and that they weren't off of Medicaid because of that, like they normally would be. So this has finally returned to normalcy as of last March, when Biden removed the executive order. And so that's the reason why people are going off of these. It's not that the Texas is kicking them off, it's that we're returning to some form of normalcy that we should have done a long time ago. And the evidence is clear that you should not expand Medicaid. It's too costly. The federal government's running out of money. They're not going to have enough to pay for it anymore. So it's all going to come on to Texas taxpayers, and meaning higher taxes or less spending in other places. This is not a good situation. And look, ultimately, this is the big deal, though, is that putting more people on Medicaid does not reduce poverty. That's what we should be focused on, is more prosperity and more optimism and pro-growth policies instead of expanding government welfare. And the people that are on Medicaid lose access to timely, quality care. That's not what we want either. So we also need a better healthcare system with less government. So let's never expand Medicaid through Obamacare or expand Medicaid at all. In fact, let's try to do something different at the end of the day. For my media hits, check out my interview on NTD News about California raising its minimum wage for fast food restaurants to $20 per hour. Can you believe it? But the real minimum wage is always $0 when you lose your job. You get no income at all. Also see my NTD News interview on the economic cost of the Baltimore Bridge tragedy and how the federal government should not get involved. Read my commentary at AIER on the $1.5 billion to global foundries from the CHIPS and Science Act, which is bad industrial policy. There's no good type of industrial policy, and gives massive money to a few businesses out of our pockets from the taxpayer. Housing unaffordability is driven by zoning and property taxes in Texas, as I noted in a recent interview with the Texas Tribune. Don't forget to watch this last week's Let People Prosper episode with John Phelan on the importance of social capital and which policies help support it most so that more people prosper. The upcoming episode on Monday was with David Bahnsen of the Bahnsen Group. We discussed his latest book, Full-Time Work and the Meaning of Life, and what comprises a free and virtuous society. Don't miss it. For my Bible verse of the week, know your enemy is what I'm going to call it. But in general, it's Ephesians 6:12. For our struggle is not against flesh and blood. That's so true, especially as Easter just passed. The death of Jesus Christ, the rising again on the third day is so important. And this is so important here too. For our struggle is not against flesh and blood. Hope you remember that. And I hope that you also rate and review this one. Share it with your friends and family. You can find all the show notes either vanceginn.com or vanceginn.substack.com. Become a paid subscriber there on Substack. That would help me out tremendously. Until next time, let people prosper.